One of the real estate investors' best wealth creation tools is on the chopping block right now, being the 1031 exchange. Believe it or not, we may actually see the 1031 exchange go to the wayside here very soon, depending on how this goes and the finalization of these election results. And this should be concerning because elections do have consequences. And if you see that these types of regulations are already planning to be imposed early on, what does this mean for our careers going forward as real estate investors? So let's take a look at this quick article, guys, and see what you guys think about this 1031 exchange, because this is coming up quite often here lately as I'm talking to investors. And this is a great tool to create mega wealth later in your career as you build up your portfolio, as you start to trade properties up. But if this goes the wayside, this was a big loophole that a lot of people use to create their wealth. And you have to ask yourself, why are they getting rid of a loophole like this, and who's the benefit for it? So let's dig into this article, guys, just to take a look at what's going on here, and let's see what's being written. Now, guys, before I show you this article, it is quite interesting and a little bit concerning. Let's do a quick recap on exactly what a 1031 exchange is, so you guys who are a little bit less familiar with this can understand as we go through this article on why this is such a scary thing that's happening and why this could have such a big impact on real estate investors going forward. So in a nutshell, guys, right here, it breaks down a 1031 exchange gets its name from section 1031 of the U.S. Internal Revenue Code, which allows you to avoid paying capital gains taxes. It's a tax loophole, right? So it's going to allow you to avoid paying capital gains taxes today when you sell an investment property and reinvest the proceeds from the sale within the certain time limits in a property or properties of like kind and equal or greater value. So I'm going to do a very basic 101 case study here so you guys can understand this. So essentially, let's say you bought a multi-unit property for $1 million. Okay, now it's worth 1.5 million and you have an accepted offer. What's going to happen is when that property closes, the net difference after all the expenses to close that property is coming to you. You're going to be taxed on this gain, right? So you're going to have a spread between the 1 million and 1.5 million and all the expenses to close this property. You're going to get taxed on this. Now, what happens, let's say, if you have a property that you see coming up that you really want to buy, you can get under contract for 1.5 million. The property may be worth 2 million. You have a huge equity position to gain, but you need the money from this property to bring the next property close on it. But what if you could roll all $1.5 million into that next property and you never pay taxes on the initial sale of this property? You are able to roll that entire equity position up into a property of like kind or equal or greater value to basically have your next acquisition, and you never pay taxes as if you would have doing a traditional route where you close on the property, pay taxes on it, and then bought another property after. So it's a time-sensitive opportunity. We're not going to go too deep into this. Essentially, you're able to trade properties up. Think of the game Monopoly, 4 red houses to 1 green hotel, right? So essentially what we're doing here. Now, this is on the chopping box. Now, let's take a look at this article. Now, guys, I have a number of reasons I want to show you this article, and it is quite interesting, and I want to give you these reasons right now, but I go look at this article and a few other articles later, guys, on your own time, just so you can be aware of what's coming. Number one, I want to show you this because if you're doing 1031 exchanges, you need to be aware that this could be going away here very soon. Number two, if you plan to be doing this in the future, you need to understand that this could be going away very soon. Number three, if this could be going away very soon in the near future, what else could be going away? And if they're doing things that are making it harder for entrepreneurs to rise up and have upward mobility and not easier, why is this happening? And the fourth reason is if you have a 1031 exchange that you're trying to get done, or you're thinking about getting done, you were going to do it sometime next year, you may want to put the pedal to the metal and try to expedite it and get it done right now, because if this changes and it gets eliminated, where are you going to be then? Okay, so the one thing I want to point out here, guys, is a long-standing tax break for real estate investors could be coming to an end. Now look at this middle line right here. This is what's a little bit worrisome to me. IRS recently issued new regulations affecting this tax break, and the November 3rd election could determine its future as well. I'll kind of break that down in detail for you guys here in a second. But look at this line right here. Right here, guys. This long-standing tax break has contributed to the making of many fortunes. So why would you want to, if you cared about the people that you represent, get rid of something that's helped a lot of people create a fortune? Shouldn't it be your goal to help people have a better life, move towards a better life, and not make it harder for them to take it away from them? So you have to ask yourself why this would actually be being taken away. Now, right below, it's not hard to understand because what you can see here is, number one, Democratic presidential candidate Joe Biden's proposed tax plan would eliminate the Section 1031 exchange privilege. That's incredible to think about, right? Number two, the IRS recently issued new regulations to define what constitutes real property to determine eligibility for Section 1031 like-kind exchanges. But those regulations won't do you any good if your ability to make a Section 1031 exchange is eliminated, and you fail to get your exchange done before that happens. So you might want to have to move fast, guys. is basically what it's saying. Now I'm gonna scroll down here to kind of give you an idea of what's happening. So this TCJA, the Tax Cuts and Jobs Act, permanently eliminated tax-favored Section 1031 treatment for exchanges of personal property, not real property, personal property that are completed after 12/31/17. But look as it goes down. Thankfully, tax-favored Section 1031 treatment is still available for property structure like-kind exchanges for real property, like real estate, right? For today, anyway. As has always been the case, the Section 1031 treatment is only allowed for exchanges of like-kind property that's held for business or investment purposes. So to qualify for this 1031 treatment for the TCJA, real property must be exchanged for like-kind real property. Number two, the property relinquished in exchange and replacement property received in exchange must both be held for business or investment purposes. So essentially what they're saying is rules have already changed for personal property, and that there's a very high likelihood, depending on the way that these things go with all this litigation we're seeing with the election, that we could see if Biden comes in, the elimination of this for real property as well. So this is an interesting article, guys. We need to be aware of these things happening. I'm not going to go through all this, but down here at the bottom, you guys can see that this potential law change could happen here, take effect as early as January 1st. So I'd be paying close attention to this. If you do use this in your business, I'd be talking to your local attorney to see if they have any information on what's coming, to see if this is just going to be a partial change. But if they're going to completely eliminate this, not only is it going to hurt a lot of real estate investors in this country, it's also going to terrify people going forward if they're doing these things like this now to make it more difficult for entrepreneurs, especially in real estate, to succeed what's coming next. So guys, I'm going to keep a close watch on this for you, but I thought you should pay attention to this. If this is something you're doing or you know people doing this, maybe send them this video just so they can start keeping an eye on this to know what they need to be doing in their business going forward. And that, guys, have a great day. See you when I see you.